What's going on, everyone? Welcome to Valley Green. Excited for today's video. In today's video, the plan is to, as you can tell probably, talk through Tesla and go over some option strategies you can use to create some awesome income on Tesla. Tesla is one of my favorite stocks. I've owned it for a long time actually, so happy to share this with you all. Quick reminder, if you could like and subscribe, that would be massive for the channel. This is a newer channel, so all the support is much appreciated. Now, jumping in, I want to quickly talk about Tesla's Q3 earnings. They did come out in October. And again, huge shout out to App Economy Insights. I've shared their slides and their infographics on a couple of my videos so far. Amazing visual representation. Quick highlights, Tesla's revenue in Q3 was 21 billion, about 56% year-over-year increase. That's massive. From a gross profit standpoint, 5.4 billion, so about a 25% margin. It's 2 percentage points year-over-year growth. Net profit jumping all the way to the right side, 3.3 billion, operating about 16% margin. In my opinion, that's not massive, but for Tesla to have the ability in this kind of growth phase still that I feel that they're still in, insane numbers, insane growth, revenue 50%, 56% increase year over year. That's unbelievable. From a production standpoint, 366,000 cars, operating cash flow 5.1 billion. So now quickly jumping over, I want to quickly run through Tesla's chart before I get into the options. So high level real quick, market cap is about $562 billion. PE ratio is 54, which is definitely high. Earnings per share is $3.27. And according to Yahoo, the 1-year target estimate is $263. So from the 6-month view, you can see they did peak around $300. This is all post-split. And now they're all the way down to 177. So almost 40% drop, roughly. Looking at the chart, as you can see again, in this 1-year view, Tesla's definitely been trending downward. They are below both the 200-day moving average and the 50-day moving average. So in my mind, it's a little bit bearish at the moment. And I'll talk about some options that you can utilize if your point of view is bearish for Tesla. Real quick, jumping in, love looking at the investor relations reports for Q3. So high level Model S, X, and 3 and Y production numbers. Like I mentioned before, production's up 54% year over year, massive, 365,000 vehicles. So I like looking at these reports and taking a spin through them. So I highly recommend it if you have some additional time. Super interesting to read about what they're doing and what their plans are. Now jumping over to option strat, I'm going to walk you through a couple strategies you can utilize on Tesla. Quick reminder, if you want to create an account with option strat, feel free to grab the link in the description below. The first strategy I'm going to talk about is a cash secured put. Now, what is a cash secured put? It's an income producing strategy. It does limit your profit and it has nearly unlimited loss. So, and you're definitely going to have to put up a lot more capital for this strategy. So I'm going to click on this. I'm going to put Tesla in here. This is going to default to December 23rd. I'm going to flip it to December 16th. So I personally like to do about options that are about 30 days out. So in this example, I'm just going to anchor on December 16th. So that's 24 days out. Right now, Tesla's trading at 178. So today they're up 9 points, which is quite a lot. What you're going to do in this strategy is you're going to want to pick a strike price. So this is the strike price. This is the price you effectively are selling the option on. For example, if you picked a 170 put, a 170 strike price, you are saying you will collect $728 today if you sell this option. But you're going to have to put up $17,000 of collateral. That's a lot of money. You may not have that much capital to put up as collateral. But what this is saying is if Tesla's trading at 178 today, you sell this option for December 16th. So over the next 24 days, if Tesla falls below 170, you effectively have the right and the obligation to buy Tesla at 170. So if it drops to 150, you have to buy it at 170. But you have to consider you were given this net credit of $728. You were given that income today by selling this option. Now, if you don't have $17,000 of collateral and you have a smaller account, I'm going to show you what option strategy you can utilize for a smaller account. So what you're going to want to do is you're going to go to a bear call spread. So this is also known as a call credit spread. Effectively, you're going to sell one call and buy a call. So I'm going to quickly click on this and I'll jump over to this bear call spread. So what's going to happen here is you're going to sell a call and buy a call simultaneously. So this is somewhat bearish of a strategy. So you're assuming Tesla's going to remain at the same strike price or potentially continue to go down. In my opinion, since it's below the 200-day moving average and the 50-day moving average, definitely has more of a bearish sentiment. So in this scenario, I'm just selecting strike prices a little bit more conservative. I'm going to go all the way up to 195 and 200. So what you're going to do is you're going to sell a call for 195. So effectively what's happening here is has a theta of 0.209 and a delta of 0.3. And then simultaneously you're going to buy a 200 call. So this is a 5-point spread difference between these two strike prices. So effectively you're putting up $500 of margin. And today, if you execute this trade at these strike prices, you'll collect $122. This is a 24% return in 24 days. In my opinion, that may be too aggressive even. You can go even further out. Let's go to 210 and 205 and let's see what happens. So in this scenario, you're selling a 205 call and then you're buying a 210 at the same time on the same expiration date. In this scenario, you're putting up $500 again and you're going to collect $70. That's a 14% return. Do you think Tesla's going to go up from 178 to 205, 210 in the next 24 days? Well, those are things to think about when considering what strategy you can utilize. If you want to go even more conservative, you can bump this all the way up to 220 and 215. Here in this scenario, you'll get $38 today by executing this strategy. If you're putting $500 of capital at risk, you're going to get about a 7-8% return if this expires worthless. So hopefully this is something useful for you. If you liked the video, I'd really appreciate it if you could like and subscribe. It'd really help out the channel. Hope you have a great day. Definitely looking forward to the next video. Feel free to leave any comments down below with questions you may have or other stocks you may want me to cover or other strategies you may want me to run through. Again, I hope you have a great day. Look forward to the next video.